and we have seen some progress there. Let's talk more about the Indian markets and retail investor interest in India and bring in Gurpreet Sidana, who is the CEO of Religare Broking. Thank you very much indeed for joining us, Gurpreet. Now, first of all, do we stay invested in the Indian markets despite this risk at a headline level on the export sector, on IT services, pharma and the car makers?
Good morning.
Good morning.
I'll say that retail investors have been consistently investing in India, and they have shown the kind of resilience, irrespective of whatever has been global news and turmoil. I think it was a good correction which we have gone through. Reasons could be anything, and whatever we were expecting over the period of time has all happened. And sustained global geopolitical reasons, and as well as the expectation of interest rates coming down, we could find enough reasons for market correction, which was a bit overvalued. Now, irrespective of anything, and even the fact that the tariffs have been announced, we have seen that there is a consistent interest from the retail investors in India, and that is also shown from the fact that we are continuously getting more and more interest. The investments which are coming through the mutual fund route are not declined at all. So there is a continued interest. So I don't see any reason that why investors will not be investing in India, irrespective of whatever is happening.
Does it surprise you that the pharma names that have a lot of exposure to the US markets in an environment where Trump is threatening tariffs on pharmaceuticals on national security grounds? I know we're not there yet, but we were expecting to see some pressure for Dr. Reddy's, Cipla and Sun Pharma, but they are performing strongly. What does that tell you, Gurpreet?
So, of course, I don't expect any major impact on the pharmaceuticals sector in India. One, for the reason that tariffs, when it was announced, they were exempted for the pharmaceuticals. And there is a natural demand over here, and India is a place where we can actually, they can look up to. Of course, they need pharmaceuticals, and these are the companies which have been consistently delivering well. So I don't see any reason why pharmaceutical sector should be at any threat or for that reason in this matter.
Understood. Do you feel that pharma could get a carve out an exemption, deeper exemptions, and we could see a further rebound if it is part of a bilateral trade agreement?
Of course. It has to be, and I'm sure that there will be exemptions for the pharmaceuticals for sure.
Understood. At a broader level, how compelling are valuations, Gurpreet, in the broader market, or should we expect a deeper valuation reset, especially if there is some guidance risk heading into earnings?
So, headline indices in India have already corrected to around 10 to 15% levels from its peak. And with this, we have seen that whatever there was an overvaluation also in certain sectors has also corrected, and they are now at a very reasonable piece in comparison to the 10-year median. So Nifty as of now is around 20 point something, which is lower than the lower 10-year median for the Nifty 50 index. So I see that the sectors are now doing much better in terms of their valuations, especially the banks, where the price to book ratio has come down to 2.2 now, which is a much lower than 10-year median for the banks, and various other sectors where I believe that the valuations are now good enough for people to relook at the Indian markets from a long-term perspective.
Let's bring in the tariff differential, 26%. For India versus 125% for China. How convincing or how strong a buy India, sell China signal do you think that is for foreign investors especially?
Of course, because it gives a competitive advantage to Indian exporters, and not just that China is being charged more. It will help India to create capacity. Along with that, whatever is going on between US and China, it is a great opportunity for Indian industries to gear up faster and take the benefit of this if it comes true. Because as of now, it is still going into a 90-day moratorium, and I believe that that moratorium can go further. But if it actually becomes the reality, I think that this is going to be a long-term competitive advantage for India substantially. Because this change is not going to be with China. It's actually a lot of other countries like Vietnam, Bangladesh, and various other places which are going to be charged much more than India. So
Right.
India is not an option. It is a compulsion for US to really be a good partner, and we may continue to get that benefit in tariffs wherever and whenever they are announced.
From the perspective of sentiment and flows, Gurpreet, do you feel Indian retail investors are losing some confidence, not just because of the potential hit to headline growth from tariffs, but also reports of a middle-class debt crisis and the associated hit, therefore, on the wealth effect?
So, not to a large extent. I think India is isolated from that. There is some organic, there was some degrowth in Indian earnings, which was there apparently because there was a 5% growth is expected for FY25, which is on the backdrop of last 4 years of continuous strong growth, which is shown by the Nifty 50 companies. But since that is a good level of correction, I believe that next 2-3 years time we'll again go back into 10 to 13 or 15% growth for the headline indices, and that will give growth opportunity once again to the retail investors to look at good valuations and growth from the Indian companies.
Gurpreet, help us understand why you have a conviction view on real estate, energy and infrastructure, those sectors.
So energy is a continuous area of focus for Indian government, because that's something which is where we believe that there's a lot of growth and need and demand over here. And real estate has bounced back after a very long gap. And we have seen that there's a continuous growth in terms of the demand and the prices in the real estate. Having said that, there is some kind of demand contraction in the luxury real estate market. But on the affordable side, as the interest rates are coming down, we see that there'll be continuous demand over there and the prices will strengthen over there further.
Understood. And in terms of sectors that you're less keen on, FMCG and railways, is there a fundamental reason there, or is it on high valuation?
Yeah, so railways is definitely because of higher continued valuations, and we believe that the growth is going to be there, but railways is going to be dominated by the fact that the valuations have been overvalued for a very long time, and it will take time to grow again. But FMCG is also because of the fact that there is continuous slow growth on the urban markets. Rural markets are still going to grow, and that's going to catch up fast. But since urban is not growing that fast, and we expect that FMCG will continue to remain in some kind of stress for some time. It may again come back in for staples, but for discretionary FMCG segment, we probably see that that will take some time to bounce back.
Gurpreet, it's interesting that the car makers like Tata Motors heading into this entire tariff diatribe were the ones that had the most to lose. But today in the session, Tata Motors is performing strongly. What is that telling you? And do we continue to? How do we approach it?
Of course, when the tariffs were announced, the first expectation was that it will hit their exports in a big way. Since this gives a 90 days moratorium gives the hope that there could be a bilateral trade deals between India and US, and automakers definitely can get the benefit from there. And that is something which is helping Tata Motors to bounce back, because the expectation of the news, which may probably impact them negatively, has come down. And we believe that that's going to not impact them as much as what it was expected earlier. But also the fact that there have been a lot of correction over the period of time. And Tata Motors have been continuously doing well in domestic markets also. So probably they have more reasons than to feel positive about it.
Gurpreet, excellent. Thank you very much indeed for that, sir. Right, we are awaiting March inflation data due later this evening. Headline CPI has been cooling this year, hitting an 8-month low in February. We'll discuss the inflation picture and the macroeconomic environment tomorrow with Chetan Iyer, by the way, of Morgan Stanley. That's it from me and all the time that we have on this Tuesday edition of Inside India. Do keep watching CNBC. Access Middle East with Dan Murphy's coming up next.